Good morning, people. How are we doing today? It is Thursday, August 15th, in what has been one of the more challenging weeks in my trading based on the head fakes to the downside, right? There's been a decent movement, strong upside momentum, right? Trying to buy these dips, but not at the exact right spots. So we have more of a rally in this market. This morning, we had some news that came out specifically around I believe it was retail sales and jobless claims, right? Unemployment and stuff. So the retail sales came out pretty well, right? Beat expectations. The jobless claims, they slowed a little, right? And all this news, this positive news, has helped these markets print yet a new weekly high. Continue on, 5,500 baby on the S&P 500. We're almost at 20K on the Nasdaq, right? 19,350 area. So a lot of upside momentum that continues here, and the buyers are not letting this go. This could turn into one of the most hated rallies or one of the most loved rallies, depending on what side you're on. But after you saw that drop last Sunday, and everyone's getting excited for a massive downturn in the markets, everyone's celebrating, yes, downside, downside. A lot of people were fearful to buy the dip. They wanted to buy the dip this whole year, and when it came, hands in pockets. So right now, we're seeing this massive rally continue. Traders are looking at this like, is this just going to go into new all-time highs? And it has that possibility. Every day continues to be a new weekly high, it seems. So retail sales, 1% came out. The month over month U.S. retail sales, 0.4 was expected, climbed to 1%. The U.S. initial jobless claims, 235,000 expected. The 227,000 figure, so a drop came out. U.S. core retail sales month over month, 0.1% was expected, 0.4 came out. And then what we have is U.S. continued jobless claims, 1.87 million was expected, 1.864 million is what came out. So boom goes the market upside. Strong rally. This is what I was talking about with our team last night. On the overnight session, I was looking to sell that 54.90 on the S&P 500. I did it. It had a decent little drop, right, nearly 20 points, but no continuation. Higher lows, traders get trapped into the lows, and then the news comes out, and up we go. So let's take a look at some of the news that has come out here before we take a deeper dive in these markets. So we have, we'll take a look and break down a full plan for the day as we get things started here. What we have also is Walmart earnings that came out, and what a beat. Walmart is up. How much now? Pre-market, it's up about nearly 9%, so that helps the retail and consumer sentiment. That's been boosting higher and higher and higher. So let's take a look at some of the news, right? Some of the news that surrounds us today is based on AI, right? And AI generative reviews that you see on websites and whatnot. So the Federal Trade Commission has taken notice, and as consumers' complaints have piled up in the age of generative AI and e-commerce popularity, so new rules are set to combat fake reviews and testimonials, while the agency will be allowed to seek civil penalties against knowing offenders. Fake reviews not only waste people's time and money, but also pollute the marketplace and divert business away from honest competitors. FTC Chair Lena Khan declared, and by strengthening the FTC's toolkit to fight deceptive advertising, the final rule will protect Americans from getting cheated, put businesses that unlawfully game the system on notice, and promote markets that are fair, honest, and competitive. Besides bans on false reviews and testimonials, prohibition will be applied to the censorship of negative reviews or compensating third parties for positive feedback. The rules also target deceptive practices surrounding AI-generated reviews or offering incentives to consumers in exchange for writing specific comments. Buying or selling fake engagement such as likes, followers, or views on social media will be outlawed as well, and clarity about business connections or ties will be required if engaging in review of a product. So businesses will have to be more careful about how they manage reviews and may need to implement stricter guidelines or disclosures that could translate into great responsibility for companies like Amazon, Facebook, Google, TripAdvisor, Yelp. While false advertising is already illegal, the new ruling allows the FTC to seek up to $51,000 per violation, but will ultimately be left to enforcement and the courts, which can impose lower penalties depending on the case and the size of the business. So we can take a look at some of the other news, right? Some robo-taxi delivery. Shake Shack is the latest partner with Serve Robotics in using autonomous sidewalk robots to deliver Uber Eats orders in Los Angeles. The news sent Serve's shares roaring about 10% on Wednesday, and the stock is up another 4% pre-market. The all-electric and AI-powered robots, which look like boxes on wheels, I don't know if you've seen those like little red ones, are equipped with advanced GPS technology and are designed to eliminate noise and congestion in crowded urban areas. Speaking of robotics, right, Apple reportedly moving forward with the tabletop prototype that has displayed similar, that has a display similar to an iPad and a robotic limb. So Apple has been continuously, gradually climbing off those lows. I don't know what I just typed in. Oh yeah, Apple. There we go. Very strong move. It's on 1, 2, 3, 4, 5, 6, 7, 8, now possibly 9 green days in a row after peaking at this distribution low at 195. So with some of the other news, we have refinancing and refinancing surges around the mortgage market, right, as borrowing costs continue to decline. The U.S. mortgage refinancing witnessed the largest increase since the early pandemic days. A refi index surged 34.5% over the course of a weekend, according to the data of the Mortgage Bankers Association, and was up an astounding 118% when compared to that same week a year ago. Overall mortgage applications also continue to climb, with the latest cooling consumer price index setting the stage for the Fed's easing cycle in September. So as we see rates continuously decline, we're probably going to see these refi and mortgage applications skyrocket over the next year or so, right? That might not be the best thing necessarily for the market, as we see a longer-winded downside cycle while they start easing as markets hit all-time highs. So the last piece of information here, news before we take a look at what's going on in these markets, is bipartisan crypto. So Senate Majority Leader Chuck Schumer aims to get something passed out of the Senate and into law by the end of the year. He said during the viral Crypto for Harris town hall, so crypto is here to stay no matter what, so Congress must get it right, while Kamala Harris hasn't formally shared her views on crypto. A move by senior Democrats to support the industry indicates that she may pivot away from the Biden administration's harsh stance against crypto. So crypto has become a fairly major topic in the election. Republican nominee Donald Trump calling for the U.S. to be the Bitcoin superpower of the world. So this morning we had a lot of news. As the markets are expecting to open, we have business inventories at 10, housing market index at 10, then we have EA natural gas, Fed's Harker at 1, and then some treasury news and the Fed's balance sheet. So as we dive into today, right, we're getting continued rally in these markets. So far, the S&P is holding very nicely. It's accepted into a distribution higher, and we're looking to continue that momentum. Realistically, as things stand, I'll be looking to see if we can hold that 55.10, 55.05, which is the first area to accept into this larger distribution to the upside. It's a fairly shallow pullback compared to where we are, but realistically, prices can hold bullish even down into 54.90 as well as at 54.70. So there are multiple areas. Even if we do get a significant pullback, there could be the information to continue this upward trend. Again, like I said before, it is harder to be bearish unless we break pivotal areas, and that area stands for me under 54.40 today. As maybe you've seen throughout these updates, every time it seems to get higher and higher. So that threshold seems to get higher and higher for these buyers to continue that momentum. And the sellers, right, they're in trouble. They've been in trouble, and I don't want to be bearish until these critical areas break to the downside. So let's open up our live trading room. Let's see what's going on. Let's wrap up the week trading much smaller size to end this week. We have OPEX tomorrow, which I don't want to play around with a lot, and we'll go from there. So happy trading, everyone. I hope you enjoyed this week, enjoyed the updates, and we'll see you guys tomorrow to wrap things up. So thank you and take care. Check out